All right, buckle up everybody, because today we're diving headfirst into the wild world of crypto trading.
It'd be fun.
You guys gave us Crypto Trading Strategies, a comprehensive guide, as our source material. And let me tell you, this thing is jam-packed. Our goal today is to equip you with the knowledge you need to navigate this market. It can be exciting, but it's definitely risky.
Definitely. High risk, high reward, as they say.
I'm already fascinated just flipping through this book. Did you know this market operates 24/7? That means there are constantly opportunities popping up. We'll be unpacking some of the key strategies from the book, like swing trading and this interesting concept called HODLing.
Ah, yes, HODLing.
We'll also touch on the psychology of trading, because, come on, who hasn't experienced FOMO in this space?
FOMO is definitely real. And mastering those emotions is just as important as, understanding the technical stuff when it comes to trading.
Right. Okay, so before we jump ahead, let's start with the basics. What exactly is cryptocurrency? I mean, I know it's digital money, but what does that actually mean?
Well, you can think of it as digital money that is secured by cryptography. Cryptography is basically just a fancy word for a system of complex algorithms.
Okay, algorithms, got it.
Yeah, and it's designed to work independently of any central bank or government.
So no one entity controls it. Interesting. Now, we all know about Bitcoin. That seems to be like the granddaddy of crypto. But this book also talks about altcoins. What's the difference?
So Bitcoin was the first, but since then, a whole ecosystem of altcoins has emerged. These are cryptocurrencies like Ethereum, Binance Coin, each with its own unique features and purposes.
Okay, so there's a whole world of cryptos out there beyond Bitcoin.
Exactly. And then you've got stablecoins, which aim to, stay stable. They peg their value to an asset like the US dollar. They can be a good option for traders who maybe want to avoid some of the wild price swings you see with other cryptos.
Okay, so less of a roller coaster ride with those. Gotcha. So if I'm understanding this right, I could be trading crypto at like 2 in the morning if I wanted to. No waiting for the stock market to open.
That's right. It's a 247 market, which is both, exciting and challenging. You have the flexibility to trade whenever you want, but that also means you need to stay more aware of market movements.
Always on alert. Now, before I even think about making a trade, I need to set myself up for success. The book really emphasizes the importance of choosing a secure exchange. Like, they really hammer that point home. It's kind of scary to think about exchanges being hacked.
Yeah, security is absolutely crucial. Look for an exchange that has robust protocols like two-factor authentication, and consider using cold storage. Cold storage is essentially an offline vault where you can store your crypto.
So, like a digital safe deposit box.
Yeah, exactly. It adds another layer of security.
But what about if I'm actively trading? Is cold storage practical for that?
Probably not for your day-to-day trading. It's more for the long-term holdings that you really want to keep safe. For active trading, you'll be using what's called a hot wallet, which is connected to the internet.
Hot wallet, okay. So more convenient, but maybe slightly riskier.
Exactly. Think of it like the wallet you carry around with you every day. It's easy to access, but you probably wouldn't keep your life savings in it.
Makes sense. The book also mentions charting platforms like TradingView. I've heard of that, but what makes it so special?
It's considered the gold standard for technical analysis in the crypto world. It gives you the tools to visualize market data, spot patterns, and use all sorts of indicators that can help you make better trading decisions.
So it's like a high-tech control panel for understanding how the market is moving.
Exactly. It's a powerful tool for any serious trader.
I can see why it's so popular. But, even with the best tools, wouldn't staying informed be just as important? This crypto world moves so fast.
Absolutely. Staying up to date on news and trends is crucial. You need to know what's happening in the market.
So where do I get my crypto news? Any suggestions?
Reliable sources like CoinDesk and Cointelegraph are great places to start. They provide in-depth coverage and analysis of the crypto world. You can also find some great news aggregators that pull together information from multiple sources.
Okay, perfect. So I've got my exchange, my secure wallet, my charting platform, and my news feed all set up. Now let's talk about trading strategies. The book kicks things off with this concept called HODLing, which I have to admit sounds pretty straightforward. You just buy and hold, right? Is there more to it than that?
It sounds simple, yeah, but there's a deeper philosophy behind it. HODlers believe in the long-term potential of certain cryptocurrencies. They're willing to weather the ups and downs of the market and just ride out the storm.
They have diamond hands. They're not selling no matter what.
Exactly. They're in it for the long haul.
That takes some serious conviction. But what if I'm more interested in, actively trading? The book talks about this thing called swing trading. What's that all about?
So swing trading is about trying to capture those medium-term price swings. It's like riding the waves of the market, buying low and selling high.
So you're not just passively holding. You're actively trying to time the market.
Yeah, exactly. It's about trying to profit from those price fluctuations. The book suggests using technical analysis, which we'll get into more later, to identify those good entry and exit points.
Okay, so it requires more active management than HODling.
Definitely. And then there's day trading, which takes things to a whole other level. That's where you're getting in and out of trades within a single day.
Sounds intense.
It is. It can be potentially very profitable, but it also involves a lot more risk.
Definitely not for beginners. What about something a little less, intense?
Well, the book also covers arbitrage. Arbitrage is basically finding opportunities to buy Bitcoin or other cryptocurrencies on one exchange where it's cheaper and then quickly selling it on another exchange where the price is higher.
Like a digital bargain hunt.
Exactly.
Yeah.
You're exploiting those price inefficiencies to make a profit. And then there's scalping, which is, scalping is the most high-frequency strategy of all.
Scalping, that sounds scary.
Yeah, this is for very experienced traders only. Scalpers try to make tiny profits on minuscule price movements, getting in and out of trades very, very quickly.
So we're talking like milliseconds, right?
Yeah, it requires incredibly fast execution and a deep understanding of market dynamics. It's not for the casual trader, that's for sure.
Okay, let's move on to something I'm really curious about: technical analysis. The book calls this reading the charts, and it talks about these things called candlestick charts. Are those red and green bars you see on like all the trading platforms?
Those are the ones. Each candlestick represents the price action over a specific time frame. They show the opening price, the closing price, the high and the low for that period. It's like a little visual story of what happened in the market.
So by learning to read these candlesticks, I can start to understand how the market is moving.
That's the idea. You're looking for patterns and trends that can help you predict where the price might go next. Of course, it's not a perfect system, but it can give you an edge.
Right. It's not a crystal ball, just a tool. The book also mentions a bunch of these other indicators like RSI and MESED. What are those all about?
Those are your analytical tools. They help you quantify the market sentiment, identify overbought or oversold conditions, and maybe even spot those trend reversals.
So they're like my crypto compass, helping me navigate the charts.
Yeah, exactly. They can provide valuable insights, but it's important to remember that technical analysis is just one piece of the puzzle.
Right. The book makes it clear that it's not foolproof. You can't predict the future with 100% certainty.
Nope. It's important to combine technical analysis with sound risk management, and you definitely need a solid understanding of the underlying fundamentals.
Speaking of fundamentals, that brings us to another crucial aspect of crypto trading: understanding what actually drives a cryptocurrency's value beyond all the technical stuff. What do you say we dig into that after a quick break?
Sounds good to me.
Okay, so let's get into these fundamental factors. It's like we're going beyond the charts now and looking at the real world stuff that drives a cryptocurrency's value, right?
Yeah, you can think of it that way. It's all about understanding the core value proposition of a cryptocurrency. Like, what problem does it solve? Does it have real world utility?
The book talks about evaluating the team behind a project. So just like any investment, I guess you want to know who's running the show, right?
Absolutely. You're looking for a strong team with experience, a proven track record, and importantly, transparency. Are they communicating with the community? Do they actually have a clear vision for the project?
Right. So I wouldn't invest in a company without doing my research on the leadership. So why should crypto be any different? Makes sense. What about the project itself? Anything specific I should be looking for there?
The use case is crucial. Like, what real-world problem is this cryptocurrency trying to solve? Is there a real demand for it?
So it's not just about fancy tech jargon and hype. It needs to have some real-world application.
Exactly. A strong use case is much more likely to lead to adoption, and that, of course, can drive up the value.
Okay, that makes sense. And what about partnerships? I noticed the book puts a lot of emphasis on that. If a crypto project is collaborating with big-name companies, that's a good sign, right?
For sure. Strong partnerships can be a signal of, well, legitimacy. It shows that established players are, they're buying into the project's vision.
It's a vote of confidence.
Exactly. And let's not forget about news and market sentiment. I mean, the crypto world, it thrives on hype, speculation, and sometimes, let's be honest, fear.
Definitely. It's a roller coaster. So how do I filter out all that noise? What are the best sources of information?
Reliable news outlets like CoinDesk and Cointelegraph are great resources. They cover everything from new projects and regulations to, overall market trends. You can also use news aggregators to stay on top of things. They're a great way to keep your finger on the pulse.
Okay, so news is vital. We can't ignore that. Now, I remember you mentioned something earlier called on-chain analysis. What is that? Is that like, I don't know, being a blockchain detective or something?
Haha, it's a bit like that. It involves looking at the raw data of the blockchain, transaction volume, the number of active addresses, even the activity of large holders.
Like those crypto whales everyone's always talking about.
Those are the ones.
So it's kind of like looking under the hood of the blockchain, getting a glimpse of how the cryptocurrency is being used and by whom. That's pretty cool.
Yeah, it can be really insightful. You can actually see how the network is growing and how people are using the cryptocurrency.
All right, I'm putting blockchain detective on my resume. Now, there's another term in the book that sounds kind of intimidating, tokenomics.
It's not as complicated as it sounds.
Yeah.
It basically refers to cryptocurrency's economic model. We look at things like the token supply, how it's distributed, the mechanisms for creating new tokens, that kind of thing.
So it's like understanding the rules of the game for a specific cryptocurrency, right? Like how many tokens exist, how they're created, how they're used.
Exactly. And understanding a project's tokenomics can help you figure out, its long-term sustainability and its potential for growth. Is the token scarce? Is it widely distributed? All those factors can influence the price.
This is making me realize how much goes into evaluating a cryptocurrency. It's more than just, hey, this coin is going up, I should buy it.
Definitely. There are so many factors to consider.
Well, we've covered a lot of ground here. We talked about setting up our trading toolkit. We dove into technical analysis. We even got into the nitty-gritty of fundamental analysis. But, before I get ahead of myself and start making trades, we need to talk about something super important. Risk management. Because, let's be real, the crypto market can be super volatile.
You're not kidding.
I mean, how do I make sure I'm not taking on more risk than I can handle? What if I lose everything?
Risk management is absolutely crucial. That's how you protect your capital and make rational decisions, not emotional ones.
That's easier said than done, though, right?
For sure.
Especially when you see those huge gains and everyone's talking about getting rich quick. The book has this golden rule, never risk more than you can afford to lose. Makes sense, but how do you actually put that into practice?
Well, for starters, have a clear risk management plan.
A plan, okay.
Yeah.
What does that look like?
Well, before you even enter a trade, figure out your entry point, your exit point, how much you're willing to risk. That way, you're less likely to make impulsive decisions in the heat of the moment.
So it's like having a strategy in place before you jump into the chaos.
Exactly. And then there are tools like stop loss and take profit orders.
Okay, tell me more about those. Those sound important.
They are. A stop loss order automatically sells your crypto if the price drops to a certain level that you set. So you're limiting your potential losses.
So you're basically saying, I'm willing to lose this much and no more.
Exactly. And a take profit order works the opposite way. It automatically sells your crypto when the price hits a certain target that you set, locking in your profits.
That's a great way to overcome that greed and that temptation to hold on too long.
Yeah, it helps you avoid those what if I had just sold earlier moments.
Okay, so I've got my stop loss to protect me from losing too much and my take profit to help me secure my gains. Anything else? Any other tools in my risk management arsenal?
Diversification, don't put all your eggs in one basket. Spread your investments across different cryptocurrencies, maybe even different sectors within the crypto space, and consider investing in assets outside of crypto as well.
Right, so don't go all in on just one thing. It's kind of like how a balanced diet is good for your physical health, a balanced portfolio is good for your financial health.
Exactly. It helps you weather those market storms and come out stronger on the other side.
And speaking of storms, let's talk about leverage. I know the book cautions against using too much leverage, especially for beginners. Why is that?
Leverage is like a double-edged sword. It lets you control a larger position than your actual capital allows.
So you can potentially make bigger profits.
Right, but if the market moves against you, your losses get amplified too.
So it's high risk, high reward.
Yeah, exactly. It's a powerful tool, but you really need to know what you're doing.
So maybe leverage is best left to the experts. The book also mentions some pretty advanced trading strategies like margin trading, futures, and options. Can you give me a quick rundown of what those are all about?
Sure. So margin trading is essentially borrowing funds to increase your position size. Futures contracts are agreements to buy or sell an asset at a specific price in the future. And options give you the right, but not the obligation, to buy or sell an asset at a certain price within a certain time frame.
Okay, I'm already feeling a little overwhelmed.
Hmm.
These strategies sound pretty advanced. Are they common in the crypto world?
They are, but again, they come with higher risks, and you really need to understand how they work before you dive in.
Right, maybe I'll stick to the basics for now. Now, what about those algorithmic trading and trading bots? Those sound super high-tech.
Yeah. Algorithmic trading is all about using computer programs to execute trades. These programs are called bots, and they can actually trade for you based on preset rules and parameters.
So they're like little robot traders that never sleep.
Pretty much. They can be very effective. There are different types of bots: arbitrage bots, market-making bots, trend-following bots, each with their own purpose.
So you could theoretically program a bot to buy and sell crypto for you, even while you're sleeping.
Yeah, that's the idea. But it's important to remember that bots aren't perfect. They can make mistakes, and a poorly configured bot could actually lose you money.
So it's not as simple as just setting it and forgetting it. You still need to understand how the bot works, monitor its performance, and be ready to adjust it if the market changes.
Exactly. They're powerful tools, but they're not magic.
Okay, so trading bots. Powerful, but not foolproof. Got it. We've talked a lot about the technical side of things, but you know what? After all this, I'm realizing there's a whole other aspect of trading that we haven't really touched on. It's the psychological side. I mean, we're all human, right? We have emotions, biases. We make impulsive decisions sometimes, especially when money's involved.
Oh, yeah, big time.
How do we manage all those emotional roller coasters in the crypto world?
That's the million-dollar question. And, it's often the most overlooked aspect of trading. But mastering your emotions can be just as important as any of the, technical skills we've been talking about.
It's funny. We've talked so much about technical analysis and fundamental analysis, but the book really stresses the importance of mastering your emotions when it comes to trading. Is it really that big of a deal? I mean, it's not like I'm making life or death decisions here.
It might not be life or death, true, but, our emotions, they can really mess with our trading decisions. Think about FOMO, the fear of missing out. Like when you see a coin pumping and think, oh, I got to get in on this right now.
Oh, yeah, I've been there. And then what happens? It crashes the next day.
Happens all the time. And then there's FUD, fear, uncertainty, and doubt that can paralyze you from making a move. It can cause you to miss out on some really great opportunities.
So how do I avoid all those emotional traps? How do I become a more disciplined trader?
Well, the book suggests having a trading plan. Decide on your strategy before you jump in. Know your entry points, your exit points, your risk tolerance. That way you're less likely to make impulsive decisions based on your emotions.
So it's like having a roadmap. It helps you stay on track, even when things get crazy.
Exactly. And then, what about dealing with losses? Because they're going to happen. Everyone takes a loss now and then. The key is to learn from those losses and not let them discourage you.
Easier said than done.
I know. But the book actually recommends keeping a trading journal. Write down your trades, your thought process, how you were feeling, all of it. That way you can look back and spot patterns in your behavior.
So I can see how my emotions affect my trading decisions.
Exactly. Okay, so we've covered a lot about how to actually trade, but now we need to talk about the less glamorous side of things, taxes and legal stuff, because it's important. The book reminds us that in most countries, crypto is treated as property for tax purposes. That means every trade is a taxable event.
Ugh, taxes. I knew we couldn't avoid that forever. So every time I buy or sell crypto, or even use crypto to buy something, that's a taxable event. I need to keep records of everything.
Yep. You got to keep those records organized. It's really important. Luckily, there are tools that can help with that, like coin tracking, Coinly, stuff like that. They can help you track your transactions and, make tax time a little less painful.
Thank goodness for that. So much easier than trying to do it all by hand.
Oh, yeah, for sure. And don't forget, the regulatory landscape for crypto is it's changing all the time.
It's like the Wild West out there.
Yeah, a little bit. It's your responsibility to stay informed about the laws in your country.
All right, noted. Okay, so we're wrapping up our deep dive here. And, one of the key takeaways from this book is the importance of building a long-term strategy. This isn't just about making a quick buck, right?
Right. Think about your overall financial goals and how crypto fits into that. Are you in it for the long haul, like those HODlers? Or do you want to try your hand at more active trading?
And remember, we talked about dollar cost averaging, where you invest consistently over time. Is that a good strategy?
It can be a really smart strategy, especially for those who are new to the market. It helps you ride out those price fluctuations and potentially reduce your risk. But the most important thing is to find a strategy that you're comfortable with, one that aligns with your goals.
So it's not one size fits all.
Not at all.
And don't forget about portfolio allocation. We've got to think about how much we want to put into Bitcoin, Ethereum, altcoins, the whole mix.
Yep. It's all about diversification, balance, and risk management. And never forget, this world is constantly evolving.
So even after this deep dive, we have to keep learning and adapting.
Absolutely.
Well, folks, we've covered a ton of ground today, from setting up our trading toolkit to diving deep into all the different strategies. And of course, we can't forget about the importance of risk management and managing those emotions.
Yeah, that's key.
So to all of you listening, I want to ask you, what kind of crypto trader do you see yourself becoming? The long-term HO dealer, the technical analyst, the arbitrage hunter, maybe even a bot master.
Whatever path you choose, we wish you the best of luck. This is an exciting space to be in. And remember, knowledge is power.
That's right. So keep learning, keep exploring, and most importantly, never stop diving.